Thanks for having me, Mohammed. Pleasure to be with you.
It's my pleasure. Thank you for joining us on Drilling into Crypto. For those who don't know you, I'd like to know about your journey into Bitcoin and how did that begin and what were you doing before finding Bitcoin?
Sure. So my background is almost 30 years in finance. Finance is a broad sector, but uh, personally, I was working, advising, and investing in the banking industry. I spent about 10 years on the sell side, working for big investment banks, researching and advising large financial institutions. Then about 10 years on the buy side, and a big chunk of that was in the years after the 2008 financial crisis, doing distressed bank restructurings and turnarounds in Europe, essentially buying broken financial institutions, fixing them, and selling them, and doing the same with credit portfolios. So that's how I started, and then I first heard about Bitcoin about really seriously conversations around 2012, 2013, and I found that super interesting at the time. But I was deep in other work, and I frankly didn't have the time, the bandwidth to properly spend time on it. And that changed when COVID hit in early 2020, because suddenly I had time. So I went down the rabbit hole properly. The cryptography, how Bitcoin actually works at the protocol level, socioeconomic, all that good stuff. And about the same time, I really started reading Austrian economics again, which gave me a completely different lens on money and credit, which is really the raw material that I had been working with all the time. And then in late 2024, things clicked together for me. I had a kind of a eureka moment, uh, essentially built on three realizations. One is that the world absolutely needs an alternative to the fiat system. Maybe not to replace it, but at least to operate alongside it. Second is that Bitcoin is the only digital asset that has genuine monetary potential. Everything else is either a security or, frankly, a casino chip. And the third one is that the existing global financial system is really not fit for Bitcoin. It's not going to adapt fast enough. And so we needed to, and we do need to build really Bitcoin native infrastructure from scratch. And that's what led us to create BTSF.
So basically, the moment you realized that Bitcoin was going to be your life's work is that moment when you realize that the current fiat system seems to be flawed, or that the socioeconomic construct of the world is not fair to a certain extent. Was that really the basis of that transition from legacy finance or financial traditional financial services into the digital asset landscape and more specifically Bitcoin? What was that moment that made you realize that, this is life's work, this is what I want to do?
Well, I think it really is a combination. At the time I had just been advising a financial services group servicing the crypto industry, spent a lot of time looking at the needs and the future needs of that industry, and then looking at what the financial systems, institutions of various kinds, banks, electronic money institutions, etc., could and could not do. And I was working on a transaction to potentially buy a bank and turn it into at the time, digital asset friendly bank. And I realized uh, when doing this that the real core purpose that a bank should be fulfilling is to channel capital to productive sectors of one form or another, and that the industry, the banking industry, both in terms of operations but also in terms of regulation, was not going to be able to do that. So that was one thing. The second, and it really, really happened at the same time, is look, I think we're all very aware of what's going on in the world and discontent with, the infrastructure that we have been working on, we have been building on or operating under for, since the 19th century, 18th, 19th century. And you can see that discontent everywhere. And when you think about it, you can trace that back to money and what it is and who controls it, and why it leads to, the discussion around inflation being the silent killer, about being a tax, that's well known, but you can extend that to what's happening at the political level and geostrategic tensions, etc. And fundamentally, there is an argument in which I personally believe that, if governments did not have the power to print money, and if the stock of money was not infinite, we would see a lot more accountability from, the governing structures, if you want to call it that way, or from governments. And so it's that combination. And I had, like a lot of people, I said I was involved in Bitcoin, or I started really going down the rabbit hole in 2020. Like a lot of people, I did spend time on Bitcoin, and then looked at, the broader, and was involved in the broader crypto industry, the smart contract platforms. But these are really, a digital transcription of existing assets, of existing flows, economic models. Granted, not completely, but they do not provide an alternative for what I think is the real problem and the way to solve it. And so for me, Bitcoin is that only asset. Really, it really is. And so that's why, when that realization came about, uh, I did not even think about doing this with, say, stable coins or something like this. For me, we had to go back to the bare bones. What is the problem, and how can we fix it? And so that meant going to Bitcoin fully, completely, unashamedly. And that's how it came about.
And being in a banking and finance background and having that extensive experience with the market, especially with regards to money and money flows and the efficiency of money itself, uh, the inflation aspect that erodes purchasing power over time for institutions, corporations, and even individuals. When you have cash just sitting in the bank, and I think it was the author of Rich Dad Poor Dad who said cash is trash. He always comes back to the narrative, which is true if it's just sitting there. So how do you see this adoption? Because there's been a lot of there's been a trend within the market, especially on public markets, with regard to building um, treasury strategies around digital assets. One of the biggest one is MicroStrategy, or today Strategy, with their Bitcoin treasury allocation that they've transitioned into a few years ago. But bringing this to family offices, institutional level, private public corporations within traditional industries, how do you see corporate treasury adoption taking place? And then there's the risk management issue that comes into play. And these companies or industries or institutions that have not adopted blockchain or cryptocurrency technology before, how they would set up and transition into that base for their treasury strategy. So I've been really focused on treasury adoption for corporations within the Bitcoin and Bitcoin mining landscape, but I'd like your thoughts on corporate treasury adoption in Bitcoin.
Yeah, so look, a lot to unpack in what you said, but cash or any valuation of money is based on interest rates. This is the core central axiom. And the problem that we have, because this then, effectively directs where capital goes. What is the cost of capital? What is the value of a project? Is a project economic? Yes or no, etc. The problem with the fiat system is, one of the problems with the fiat system is that this core measure is completely skewed, right? So you have a lot of projects, a lot of capital, which is being channeled to projects that appear economically appealing, but in reality, they're not. And I've seen that firsthand dealing with the distress. So that's the first thing. It's very important to understand that actually, or this aspect that, the price of money is fundamentally skewed in the fiat system. Now, as far as Bitcoin treasury adoption, I think it's a great first step. Kudos to Michael Saylor, to MetaPlanet, and to the others that have made Bitcoin acceptable to the world. And you're seeing big leaders, JP Morgan, BlackRock, and the others that are changing their tune. And you see also, governments changing their tune about this. And I think a lot of that comes from the amazing work that Saylor started doing. Now, going back to the core belief that Bitcoin has genuine monetary potential and that the world needs it. Everybody knows kind of the 3 core aspects of a monetary asset. You start with a store of value, medium of exchange, and then a unit of account. Now, Hayek or Rothbard or etc. will tell you, well, actually, it starts with a medium of exchange, which, and so, but the treasury companies really are doing great work to make Bitcoin acceptable as a store of value. Our mission at BTSF is to to support its evolution as a medium of exchange. The way we think about it, credit makes money flow. In any monetary system, credit is what transforms a store of value into a medium of exchange. And we think that Bitcoin needs this, right? I think we're solving 4 interconnected problems that effectively, answer part of your question. The first is we're channeling Bitcoin capital to the operators who actually secure and grow the network, right? The miners, the infrastructure builders. These people earn in Bitcoin and they should be able to borrow in Bitcoin, right? The second, and going to your point, we're creating real native yield for Bitcoin holders. Right now, If you hold Bitcoin and you want yield, your options are not great. You've got centralized lenders who re-hypothecate. You've got DeFi protocols with smart contract risk. If you are a fiat investor and you're kind of in between, you may be tempted by the narrative of some treasury companies that say, hey, we're effectively creating leverage and we're calling that Bitcoin yield. What we're doing is we're offering real yield. Yield is nothing more than a combination of the time value of money and credit risk in any asset, in any monetary asset. Bitcoin doesn't have it really yet, at least not for the productive sector. So that's what we're doing. The third one, the third problem that we're solving, I think, in doing this is that as I said, we're supporting really the evolution of Bitcoin from store value to medium exchange. And it means that whatever capital is being channeled and employed within the Bitcoin network does not need to go out of it, right? By doing this Bitcoin-denominated credit to Bitcoin earning companies. And the fourth one, which is really, really important, it goes beyond what you were saying, but it's really important to us, and we want to support decentralization. I mean, we're focused on the small to the mid-cap miners, for example, the ones that don't get a term sheet from JP Morgan. I think, when you look at the evolution of the Bitcoin network, a few years ago, the top two pools were like 30% of the global hash rate. Right now, you're at close to 50%. The four largest pool own, 2/3 of the global hash rate. I think if we as a community want to make sure that Bitcoin succeeds, we need to really spend time thinking really hard about how do we ensure security and decentralization. And part of our mission is to make sure that this happens by working with the small to mid-cap miners, by working with the small to mid-cap pools as well. How can we support, the long-term viability of Bitcoin? That's a really important part of our mission. So treasury companies and treasury adoption will continue. That's fantastic. It needs to happen. But naturally, the question becomes, once you have that, what do you do with your Bitcoin? And like any treasury, like in any monetary system, it's a question of risk appetite and as the holder of the Bitcoin, what do you want to do? What risk are you willing to take? The way I think about it is no different from, any fiat treasury. Some people will keep a bit in the bank account, for lack of a better word, just because they know that they're going to have needs. And then they will also put some in short-term opportunities and others, and some other capital and long-term opportunities. And that's where we play. We are really channeling capital to productive uses. That's more like, we've got different products, but that's more medium to long-term capital for the infrastructure builders.
Yeah, I think there's a massive gap it's massive for the industry, but there's a big gap within the Bitcoin mining industry for the small to medium-sized miners that are looking to deploy infrastructure. And does your lending support infrastructure builds, or does your lending lend against existing Bitcoin, or do you lend against future hash rate? Where do you see that this lending could be put to more productive use? Because I know personally, and as our company also operates in the energy to compute services side, we know of many new entrants into the Bitcoin mining space. And even some looking at it from a portfolio optimization strategy where they can allocate capital towards Bitcoin mining specifically and earn high yield or invest into high yield digital infrastructure, using Bitcoin as the yield and the upside, right? As long as you can hold it long enough. But
Yeah.
do you see an allocation of lending towards new build outs that are backed or by hash rate or infrastructure itself? Or is still the industry that you're in looking at the risk appetite only direct exposure to existing Bitcoin holders? Because, in order to fuel the industry, right, and allow the infrastructure to continue to build out, I think the industry needs a lender that can support new builds and and collateralize new infrastructure versus Bitcoin holdings. Because because the only reason I'm saying that is because there are new entrants coming in that don't own Bitcoin but want to contribute to the network.
Yeah. Yeah, you're absolutely spot on. What Yeah, there's a lot of new entrants. A lot of the entrants that certainly I see are people that will do effectively Bitcoin collateralized fiat lending. So it means you need to own Bitcoin and you're borrowing in fiat. That's not where we play at all. So we definitely fuel existing, or support existing, we support build up, and we support so build up in two forms. It can either be completely new operation or it can be expansion. Fundamentally, what it means is that at the core of it, you are monetizing, or we are monetizing hash rate, energy hash rate, however you want to you think about it. That's very, very important. So two important aspects. One, we do on purpose support new build, be it completely new or expansion. Second, we are lending, and it's very important, we are lending in Bitcoin to Bitcoin operators. And that acts a little bit as a truth filter. A lot, because
Because you want
it's better.
in Bitcoin as well, right? So
Exactly. So if a company has as a business model whose business model is to mine Bitcoin, or whatever they're doing, to where they are going to get their revenues in Bitcoin. You want to make sure as an investor, that actually that project makes sense economically in Bitcoin, not in fiat. And we've seen that in past cycles where people were kind of got a false idea of the true economics of a project, a bit like what's happening in the fiat system, because they were looking at it from different angles. Yes, in dollars looked great, in Bitcoin maybe not so great, right? But it's also better for the borrower, because look at what's happening now. Yes, over time, as Bitcoin matures and it becomes more of a medium of exchange, the volatility is going to decrease, etc. But right now, if you want to build a mining business, I think you need to think really hard about the structure of your liabilities, because a lender doesn't have the upside of an equity investor. A lender will measure, its exposure depending on whether they get repaid every, day, month, whatever it is. If you are in a position where Bitcoin suddenly drops 30%, like we've seen, you are at risk of the lender saying, you need to do something about it. And it may not, and it has got nothing to do with your core operation. You so, by us lending in Bitcoin, if, Bitcoin to USD drops, it doesn't matter. What matters really to us as a lender is that you are the best operator possible with the capital that we give to you. So it creates a healthy relationship
And keeps
everywhere.
flowing within the ecosystem and on the network, which is
Exactly.
said earlier, is to keep the money flow within the network in order to increase
Exactly.
aspect of medium of exchange. Right?
E- Absolutely. That's exactly it. And so with that in mind, we've built a team that has people that come from different well, not industries, but with different experience. So uh, I explained what my background was, but we have one of the core team member has been a miner since I believe 2016. Another one has been operating a pool for the past 5 years. Another one has been building, blockchain system for banking for banks. We all come at it from different angles, so we can really maximize what we know about the industry, what we know about credit, but also what we know about the technical aspects. So um, we're starting BTSF with essentially two types of product. One is uh, effectively, almost like private credit, structured finance type of loans. It's for miners that typically will want to expand, to buy a new facility, to build a new facility, expand, um, and typically then that collateral, the way we look at their business is, um, you know what kind of assets are they looking to buy? So typically will be, there will be some real estate, there may be some energy contracts or energy assets. There will then be the machines, and so therefore what compute power they can deploy, and what is going to be the profitability of this, what other assets do they have. So we collateralize all of this, and we take everything into account when we underwrite a loan. And the second one, but that's more for like professional miners. But as part of the mission that I told you about, focusing on decentralization, we also have a completely automated product that we're building that is effectively revenue based. And that is for, yes, the small miners, but it goes down to the prosumers, the guys that want to have, one, five, 10, maybe 100 machines. And we can channel capital to help those guys increase their capacity. And we're taking a share of revenues effectively, and that's beautiful because revenues go down because there's a compression in hash price, because whatever. Well, this is a risk that we take, but they have increased resources to effectively have more machines, and in so doing, we have it gives it 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 creates, or it facilitates access to mining to
Yeah.
the small guys.
Well, that
And
barrier
that's really, really important.
increasing. The barrier.
Sorry?
I mean, the barrier to entry into mining is actually increasing. It's not lowered by any way or shape with the larger institutional Bitcoin miners building at scale. You no
Yeah.
longer, as a retail investor, have direct access to build your own site. One, because it comes down to the infrastructure and know-how of operating such infrastructure, but also access to energy is not readily
Yeah.
available for small to medium-sized deployments at a proper at an economic rate in order for you, from a accounting perspective, from a P&L perspective, to be making a profit.
Yeah.
So that barrier to entry is definitely a problem for retail miners or even private investors that want to enter this asset class. And
Yeah.
it's refreshing to see people like yourselves that are building in this space, that are lowering this barrier to entry and allowing this digital infrastructure to be turned into an asset class that,
Mhm.
for me, it's incredible because I also come from a corporate finance background and transitioned from finance into energy finance and then Bitcoin mining from there. And I realized the exponential value that you can get off of owning the infrastructure. But even as someone who owns machines or miners, operating them at the right time, making sure you have the right efficiency and long enough to take advantage of the full or as much of the cycle as possible, you definitely see at least 2 to 3 times returns, within a normal cycle. But then you have the upside that's unaccounted for, that is simply forecast and predictions. But looking at historical trends and how Bitcoin performed post halving events, you hold your Bitcoin long enough, and let's say a horizon of 5 years, you could potentially see, 3, 4x on your investment, if you don't use the Bitcoin to pay the power bills. But a lot of people I've seen, they've mined Bitcoin, sold Bitcoin to pay the hosting fees or power bills, and eroded all of their upsides. But those who have not done so have actually broken even during, a cycle that they were involved in where there was a crash, or done 2 times their money if they held their Bitcoin long enough post crash or post halving. So there
Yeah.
is that gap within the industry, and I like to see it turn into an asset class. But if you had, 20 seconds to spread a message or say a word to the audience, what would it be?
Right. So I think the message that I would have is the following. Number one, the world really needs Bitcoin. Number two, therefore, I would encourage all the builders to think about what they are doing and how they're doing it in the same way that Bitcoin operates. It's how do we maximize our individual goals in a way that maximizes the value of the asset or the community. That was, I think, one of the magical things about Bitcoin. And we should all keep that in mind. We are doing it, and the way, and the, we are going to be the more successful if Bitcoin as a whole becomes successful. That's how we think about what we're doing at BTSF. This is our mission, is not just to build a great business, it's to contribute to the success of Bitcoin. And I would encourage everybody to do the same.
Amazing. Well, thank you, Benoit, for being on this show, sharing your message, and spreading the word on Bitcoin and this new asset class that we're all building together on the infrastructure side, which honestly for me is phenomenal, especially when you put together the whole value chain from energy to compute and capture a digital energy asset class that never existed before, that now, people like yourselves and BTSF are providing access to that. I do agree. The world needs the world of, at least the world of finance and money needs Bitcoin at the very least to, you know, uh, provide this equitable socioeconomic structure that we all need around the world, and to also, bring in the inclusion of finance around the world, and to build equitable energy systems across, communities. This goes down to community level, and I'm sure you've seen stories about communities building their own energy to Bitcoin mining infrastructure in different parts of the world and how that's positively affected the community economics. So this, having someone like you focus on small to medium infrastructure, which I've had a lot of experience trying to convince larger lenders to focus on this space or to open a department that focuses on small to medium infrastructure, because from a business perspective, it requires volume. But from a fundamental perspective, you're strengthening the network, you're strengthening the uh, the asset or the commodity that you're already involved in by supporting the smaller guys and making trickle down economics work for everyone, because usually it doesn't always work in the traditional world. But I think Bitcoin fixes a lot of the flaws in global economics. But I appreciate your time, Benoit. Thank you for joining the show, and please keep in touch and join our supporters club.
Thanks for having me, Mohammed. Keep doing the good work and spread the word as well. And let's keep building together.
Amazing. Thank you.